Oil, on the other hand, well, that continues to skyrocket. It closed at $107.90 after briefly jumping over 108. The price of oil has set new records in 5 of the last 6 trading sessions, even though supplies are plentiful. The weak dollar has prompted speculators to switch from financial stocks to oil futures, which currently have a better return. So why are gas prices continuing to climb so high? Willa Sandmeyer hit the streets to find out what is driving the cost of gasoline so high and what Southlanders have to say about it. Let's go live to West Hollywood, where Willa Sandmeyer is live with more on this. Willa.
Good evening, Leila. And I talked with the head of a consumer watchdog group. She believes the price of gasoline continues to climb, not because there is a lack of supply, but because of speculative buying on the oil futures market. Now, she says those buys can be made in really huge blocks, and the result is, well, driving up the price of oil. She said investors bet that prices will be higher in another month, and they have been for well over a year. Filling up your tank didn't used to cost $50 and $60, but it can now, with prices up around $4 a gallon and higher. This woman commutes from Chino to her job in L.A.
It's really ridiculous. It's horrible. It makes it really hard to get back and forth to work.
In Santa Monica, gas is already going for $4.19 a gallon for premium, $3.63 for regular. So what's going on here? The research director for oilwatchdog.org, a consumer organization, believes the problem is the unregulated energy trading markets, where speculators and hedge fund operators pour billions of dollars into oil futures.
There are these Wild West, completely unregulated markets where trades can take place completely unseen by anyone. People can make trades so big that they move the market.
Dugan says speculators have been able to drive up the price, even though there is no current shortage of oil, no shortage of gasoline, and no market reason for prices to spike. And because the returns are good, big investors and hedge fund operators fleeing the stock market and its wild ride are pouring even more money into oil futures. In fact, the price for a barrel of oil has nearly doubled in just the past year, last January going for $51 a barrel, now over $107 a barrel.
They're continually buying contracts for a month ahead that are at a higher price. Now, at some point, this would seem to be a bubble that has to burst. But the shocking thing is that it hasn't.
Dugan believes consumers need to support a congressional measure that would regulate futures oil trading. Under legislation co-authored by Senator Dianne Feinstein, big trades and who is making them would have to be reported.
Just knowing who is making the trades, what size these trades are, and how they're being placed is a discouragement to people who want to manipulate the market.
In fact, Dugan says that some analysts believe that such legislation would result in bringing down the price of oil by as much as $20 a barrel. Now, by the way, that measure, Senate Bill 2058, it did pass the U.S. Senate. It is now stalled in a conference committee. Live in West Hollywood, I'm Willa Sandmeyer. Walter, back to you.